We like Parshi.
Hello and welcome to another episode of In Conversation With. In Conversation With is a management series by CASI Global New York, where we are in search of executable advice. So we invite senior management professionals to discuss debate on various topics regarding management and so on. Today's episode is going to be very interesting. This is our third or the fourth one on blockchain. There is a lot of demand for blockchain. There are so many contradictory views on blockchain that we were forced by our product team to have one more seminar on blockchain. My name is Paresh and I'm a member of the board of directors at CASI in New York. We are the world's largest chain for sustainability. We're present in 52 countries. We also run the world's largest volunteering platform with a reach of over 3 million volunteers. Okay. So welcome to the show, everyone. Welcome to the seminar. Before we start with one of the speakers, I have a generic question. Anyone can answer it. Feel free to answer it. Even the audience can answer it. I would request you to give me a 30-40 second answer. My question is, why is there so much hue and cry about blockchain? On the looks of it, it just seems like another way of doing bookkeeping. So it is just a small addition to your supply chain, where you are doing supply chain in one way, and then there is a new technology or a new language, and then we are using that language to make notes about our supply chain. So why is there so much hue and cry? Is there really something to it, or in the world of social media we have managed to make the hue and cry so large that the valuations are flockering around it? Or is it just that the cryptocurrency has given a push to the blockchain technology so that there is nothing to it? And the most part of blockchain is crypto, which is making a lot of noise. So opinion, anyone's opinion. Patrick.
Well, that sounds like something I would say.
Okay, then I will take the stab at this question then. This is Sudeep. Hi. So essentially, why blockchain is making such a big noise is essentially because it is a foundational shift for how we do transactions, right? And more than anything else, what it means is that the centralized way of doing things we have come to a threshold point where with a centralized way of can you guys hear me? Am I audible?
Yeah, you're audible.
Yeah. So the centralized way of bookkeeping or any transactional system can be replaced by a decentralized way of doing things on scale. And why we are doing that is basically mostly because of Maslow's law, but essentially the turning point has come that we can actually remove centralization of transactional systems. And it can what scale we can achieve is a different question, but that turning point means the design pattern that will be following through would change a lot in the world of systems, and that is a foundational shift. Like it or not like it, it will impact your world.
So my follow-up question again, and anyone can answer it, I would appreciate a short answer, is that so really the thought process is that we really want to know who bought what before us and after us, and who did what before us and after us. And we are so sure that frauds will happen that we now need the names and the addresses and the Aadhaar card numbers or the EIN numbers of everybody who was involved in the product or in the chain. Is that another way of putting it? That is why we need blockchain, just to know that is everything okay. So we are afraid of a fraud.
I don't think that's the right way of looking at it. The reason is that what you have done here is that you have put a use case in front of the technology and essentially looking at the technology from a purview of a particular use case of provenance or track and trace. uh, uh, and the functionality, I mean, the use case has its own needs, right? It has its own functional objective to achieve, right? And if track and trace is relevant to that objective is entirely a different question, and blockchain has nothing to do with it. What I am saying is that when you actually have an underlying layer which is decentralized, which does not require central authority to actually reconcile, and it's auto-reconcile in itself, it brings down the cost of doing that activity. It doesn't necessarily mean that you want to, what it achieves in the process, whatever byproducts it achieves in the process, are useful for the end user. It means that the cost of the system comes down.
Okay, thank you very much for that answer. Let's go on to Varunji. Varunji, your thoughts, please. What's your angle on blockchain technology? Please tell us.
Well, as Sudeep mentioned, right, I also see this as a paradigm shift because, we have so much trust in our centralized systems right now. And I see that it has been eroded to a level that, we don't trust our centralized gatekeepers anymore, right? So, if we have this where you are actually trusting the code, I think, you are actually doing a transition to a altogether different economy, right? I mean, I will have a presentation where I will talk about tokenization part. So I think you need to identify like what is that element in blockchain which will be transformative. And again, there is a lot of hue and cry on crypto part, right? Okay, so there's a lot of hue and cry on the crypto part, right? Like there are like a lot of Ponzi schemes, and that is getting the bad name. But if we focus on the transformative part, right, the future token economy, how it enables us to transfer value, I think that is what we need to focus on. Because again, blockchain has a fundamental marketing problem, right? You see people on both the extreme end, where one set of people have this radiating exuberance about blockchain can do anything on this planet, and some people have reflexive fear, like they're still worried, right? So idea is to bring those two set of people in the middle ground and then move forward, right? I think that's my point of view right now for blockchain.
Thank you very much, Varunji. Please show us the presentation that you have for us today.
Sure. So okay, can I get the rights to share?
Sure.
Yeah, I've given you the rights.
Perfect. Okay, thank you. Okay, is my screen, can you guys see my screen?
Yes.
Okay, perfect. Okay, so, again, I'm not going to talk about what is blockchain and what does it do. You have a lot of, seminars, PPTs available there. Today I'm going to talk about, primarily about the exciting stuff, right? How blockchain is able to revolutionize, transform towards token economy, right? We are right now into platform economy, where you transact information, and the idea is, again, as I said, blockchain has a fundamental marketing problem, right? So how do you come out of that that problem and move towards a decentralized future, right? So as I said, again, decentralized, there is a lot of focus given on that, and there is a lot of inflated expectations around decentralization. My personal thought process is that both ecosystems has to coexist, centralized world, decentralized world, because again, right, there is one set of school of thought which completely believes in decentralization for every aspect of our day-to-day life. But I believe that for we to transform to token economy, both ecosystem has to coexist and then move forward, right? So again, when I say about token economy, there are new business models, there are new intermediaries. I think the first fundamental thing, when you said that why there's a huge and cry, there is always a fear of disruption, right? All these incumbent players, they always fear the threat of getting disintermediated, right? So again, the idea here is with this new token economy, you're not getting replaced, you're not getting disintermediated, but you are actually adopting to a new fundamental model itself, right? You will have a different role to play. And if you would have seen the landscape currently, all these big players, right, like say Goldman Sachs, PNB Paribas, they've started Fidelity Assets, they started redesigning their business, right? Like they've entered into crypto space, because they understand, right? Just staying focused on their current business line won't be enough. They need to shift their gaze, and that's the fundamental shift in how your existing players adapt to blockchain. And as I said, again, blockchain is not decentralized in the future. It's a coexistence of both the ecosystems together, right? So as I said, right, there are two types of use cases I've seen generally, right? One is, I call it the boring stuff, right? You'll see all the supply chain management use cases, healthcare, so those are basically, the internet-based applications trying to move to blockchain, right? Like kind of digitizing your stuff, and then moving to blockchain, right? So again, these applications are important, but mostly they deliver only incremental improvements in your productivity, right? So but as I said, the focus of today's session is basically on the exciting stuff, right? The applications which are very native to blockchain, right? They don't have any past baggage. They are purely built on blockchain, and things which have never been built on blockchain before, right? Purely new stuff. And these are the ones where you experience an exponential improvement in your in your growth, right? So as I say right now, as we talk right now, we are just sitting on the tip of the iceberg of the revolution which needs to be coming, right? Like there is a huge wave of innovation which comes in. It again depends on a lot of regulatory aspect also involved, because we see a lot of disparity between regulatory frameworks, right? Some advanced geographies are really advanced in terms of the regulatory framework, and there are laggards we are still trying to catch up, right? So once we have this standardization of like protocols and regulatory framework, you will see a sort of wave, innovation destructive wave, creative destruction, where both your old industries and the new startups are trying to coexist, right? So again, the exciting stuff, right? So that particular exciting stuff is generally divided into four parts. The way we see it, I mean, you might have heard a lot of about DeFi, right? Decentralized finance, decentralized infrastructure, your self-sovereign identity, like, and decentralized market. So what exactly, so these are four fundamental pillars of your decentralized future, right? These are the exciting stuff, and everything plays a critical role here in terms of, so for example, if I talk about, I think Sudeep also mentioned earlier, right? This, blockchain is basically, it's a internet, it enables a new kind of internet, right? Where you have, you do transaction of, value, you transfer value, not just information, you transfer value. And this is the fundamental shift, right? And because if you see, look, currently there's a lot of information on blockchain, and I've particularly used a quote from the former CTO of Coinbase, where he says that in future, acquiring a company will be as simple as, getting hold of their private key, right? Because everything would be on blockchain, right? From their corporate structure, from their assets, from their contracts, from their payroll, financials, everything, right? So that's the future we envision, that all information is in blockchain, where people can always have a live snapshot of companies financial, because in today's world, if I see, there's a lot of information asymmetry, right? What I know might not be the same what brokers know or the market knows, right? So there's a lot of inefficiency in the market in that sense. So I think that is one of the exciting stuff which I believe that will change the market radically. And and these are some exciting stuff to come, and there is a lot of I mean, market is flooded with a lot of protocols right now. If you look at DeFi world today, there are hundreds and hundreds of protocols. But again, we are in very early stage, where you might see some of the use cases getting failed, getting bad name. I mean, you might see this crypto getting hacked. Very frequently, right? You might see in different parts of the world, you're getting this news. Even some of the big names are into that radar, where you see that they get hacked. So, I mean, it will take time. We will be there, but I mean, it would be a structured approach which will get us there, towards moving that, in realizing that, decentralized future dream. So, okay, so I'm gonna rightly jump into tokenization, right? I'm sure everybody knows that what is tokenization. It's basically, putting your real assets onto blockchain, right? And tokenizing and leveraging, and it can be anything, right? When I say tokenization, it can be your physical assets like securities or real estate or art, And I'm sure you would have heard NFTs have really taken the world by storm now, right? Everybody is onto NFT. You won't believe, I actually logged on to OpenSea and someone created a clownfish, right? And that was sold for 1 ether, right? Just clownfish. And there's a huge market now. So do anything, be creative. So NFT has taken the world by storm. So again, pretty early stage right now, NFTs. We haven't explored the enterprise use cases of NFT, which is again what I'm working on right now. Because NFT is still again, into music, art, digital collectibles, but not into primarily enterprise use cases. So that is one thing, which I'm focusing on. And you might ask this question, why tokenization, right? So when we talk about all these illiquid assets, right, like say real estate, private market, they are generally very hard to liquidate, right? Because they don't have a market as such, so there is no a platform or marketplace which connects the investors, with the with the people who want to sell their real estate market, right? So there is a big gap here. With tokenization, it's just not, I mean, you can think of any use cases, and I have a couple of use cases which I have handpicked just to show the potential of, how tokenization look like. One is real estate, and one is, how do you, like give equity of your future income rights, right? Like if you are a, like say athletics or a star, or a artist or a musical, player. So how do you tokenize your future income, right? How do you futurize your own talent equity, right? So that is one use case which I've selected. So when we talk about, the entire tokenization thing, it's very important that we understand some, granular terminology, because, many people get caught up with the terminology, and it is, it depends on different platforms, the way they use it. But I think primarily what I've done here is, I've broken down into 4 types of tokens. The security tokens, which is my area of work, where we are actually creating a an entire end-to-end platform, which is, your primary issuance platform, you have your, digital custodian, and you have a secondary trading platform, right? So so I'm working on that right now. And then you have your utility tokens, right? So utility tokens, again, when I said security tokens, they are highly regulated. They are just like your traditional securities, where your regulators will definitely get involved and make sure that, all the laws are compliant with. But when we come to utility tokens, they are not regulated, right? It depends on the use case, what kind of use case it is, and it depends, right? And you have payment tokens, and hybrid tokens is again, mix of both your utility and payment tokens, right? So this is fundamentally, I've just broken down on 4. You might have further subsets as we grow into the landscape. You might see further, subset of tokenization taxonomy. But
No, so how are security
this
tokens
is,
regulated?
they they basically represent the securities. Like if I want to tokenize, go out with an IPO, right? Instead of giving shares, I give tokens to my shareholders, right? So what happens is, if you look at the value chain of, IPO, right? Like say example, if I have a company, I need to go to the market to raise funds. I have to, like talk to many players in the value chain, right? I have my investment banker, I have my physical custodian, I have my settlement thing, so there are a lot of players in the value chain before even I get listed. And it's a Herculean task for SMEs, right? Like innovative SMEs, there is always a funding gap, right? Because for them to get listed on,
Yeah, but that is, see, that is exactly where the problem is. Tokenization. Now, what happens is when you come out with an IPO, your shares are going through NSDL or CDSL.
correct.
So finally, NSDL and CDSL are regulatory bodies of the government.
Exactly.
So then, if a company is issuing 1,000,000 shares at 10 rupees each, then all the 1,000,000 shares are accounted for at NSDL. Now, what happens is when you go into tokenization, tokenization is something which is not done by NSDL. So between me as the final end customer and NSDL, again there will be an IT company who is into tokenization. So that is exactly where the chances of frauds will happen, because if there are 1,000,000 shares and NSDL is giving a guarantee that there are only 1,000,000 shares, then as the end user or buyer of a share, I know that there are 1 million shares and this is the market cap. But when tokenization is done and NSDL is not doing the tokenization and a private company does it, then what is stopping the private company from issuing 2 million tokens or 3 million tokens?
Yeah. So again,
That
okay.
is exactly why currency is printed by the government and currency is not printed privately.
No, I think you have brought up very good point. So when we talk about security tokens, right, what it fundamentally does it replaces those two entities, right? NSDL, your set. So you have actually shortened your value chain, right? There is no more settlement party which actually takes care of your settlement, right? So you're directly transacting on blockchain. And when you said that, you can actually mint, n number of tokens, right? So again, this is a regulated industry, right? When you
No, but
tokenize,
the
right?
regulation stops at NSDL and the company, IT company, doing the tokenization is not under any regulation. So once you are able to issue a billion tokens instead of a million, you are free to shut down your company and go to Cayman Islands. So what
Correct.
is stopping you then?
No, so again, so that's the bad reputation. This.
No, it is not bad reputation. It is
No,
a chance of opportunity. So
correct.
see,
No.
you will not steal $1 million, but a billion, 10 billion, 100 billion, 1,000 billion, trillion, I can go on. And somewhere down the line, people will say, okay, this is where I will commit a fraud. So it is only a matter of number. Corruption is guaranteed. It's a matter of number, which number will make the person corrupt. So if you go into tokenization, the only solution is NSDL has to believe in tokenization and the tokenization has to be done by NSDL. Then the moot point of having an IT company dissolves, because the only thing you will do is you will set up the tokenization IT for NSDL, and that is where your job ends. So you lose all the billions of valuation which you may today have because you are into tokenization. Then you become a regular BPO IT company. So how do you solve that problem?
So,
Sudeep, you were saying something, Sudeep.
Yeah, so let me respond to that. Paresh, first of all, even when you actually securitize in normal market, you have market makers, right? So you will have a HSBC or SBI caps doing the IB business while you are actually creating the shares and actually evaluating it, right? So, and I get your point, right? NSDL is not being ruled out from this particular industry, and there is a reason why we are at a current state where crypto's tokenization, which is working pretty predominantly incestuously in the crypto space right now. And there are reasons behind it, which you mentioned is NSDL needs to be in it to actually do that. NSDL today also provides the oversight that this particular thing has been done properly and been listed. And who provides you the IB capability is typically an investment banking firm, which is basically helping you securitize that particular script. What will end up happening in future is essentially you'll have to build a platform, and rather than having centralized information where I do not know how many stocks, I will have to go to a website, multiple websites for that matter, to see how many stocks have been moving. The tokenization gives you a fundamentally better control over the movement of this particular stock. And NSDL would still play the role. It will not play the role of just the jurisdiction, but also the auditor of this particular tokenization. And it has to happen if you have to work in an organized finance industry. But where the things change is that today, for example, there's 1 million stocks that have been floated. I do not have an ability to see the ownership of which stock is where today, right? Tomorrow, if this particular stock is actually listed on a well-networked blockchain, for example, Ethereum, right? And it is already written that if the ownership moves on an Ethereum, a well-networked blockchain, I would be able to check, irrespective of being NSDL or non-NSDL, I can actually go as a person who's participating in this particular transaction. I can go and check that particular stock is where it has been told to be. Right. That is the difference in the transparency that we are bringing. And nobody's saying that NSDL should not. What we are saying is not that NSDL's oversight is not required. What we are saying is NSDL's administrative overreach is no longer needed for the market to operate freely. it can still play the role of oversight, and so can a lot of other non-governmental organization play the role of oversight and say that, hey, the business is acting in the right way that it should be, rather than depending on only one body. And if I actually can corrupt it, it is much more easier to actually create a market imbalance. So that is
essentially a private IT company would then play the role of a regulator.
Nobody's that's exactly my problem with the line of thought process that you're having here. I'm saying is that the IT company is only is not regulating anything. The IT company is saying that I am facilitating the platform, and not even one IT company. For this to work, there would be multiple IT companies which have to play the role. Just like multiple investment bankers are playing the role of underwriting the scripts, right? You have a Goldman Sachs, you have a SBI Capital, you have HSBC in India, right? Which are playing the role of market makers, and that will be replaced by a multiple slew of technology companies. These technology companies could be the IT wings of these platforms, which are working on a technology or proprietary technology, which are fintech companies like the one we are talking about will do. But still, the essential aspect is that this market would become far more transparent, far more liquid, and the cost of transaction, which is the brokerage and the amount of money that is done to achieve this transaction and the oversight, will come down drastically. That's where the tokenization helps.
Sure, I have some follow-up questions, but let's get on to that later.
Yes.
Please go back to your presentation, sir. Let's hear the rest of it, and then we can have some questions.
Sure. Yeah, sounds good.
Please.
So yeah, so I think Sudeep mentioned, right? So in this entire value chain, you will see new intermediaries coming, right? So when we talk about like security tokenization, you will see like the IT company which you talked about. So they are just facilitating the process, right? Like minting the tokens. But end of the day, again, it's the regulatory oversight which gives them the license to oversee everything. And as Sudeep very rightly mentioned, the administrative part of like the existing NSDL, right? I think it is far less, and all the market players have same access to the information because it's on public blockchain. So at any point of time, I would be able to do the mapping of who holds my security tokens, right? Rather than in today's part, there is no one point of ledger where I can directly get this information, snapshot of my positional holding of my particular issuance, right? So I think that is a fundamental benefit when we talk about security tokenization, right? So okay, yeah. So as I said, I wanted to talk about the real estate market tokenization, right? Primarily because right? Like there has a lot of friction, right? Again, very inefficient, illiquid, and price discovery is always broken. Yeah, you never know whether the price is right or not. So again, and then it's a huge market as well, right? So I think that's why in blockchain, this is a very solid use case. There are many players in the market which have actually started, like tokenizing real estate market. And it's quite possible that I sit here today in Bangalore and own a property in Michigan, Detroit, Michigan, right, and start earning income from that, right? So right, so blockchain to real estate investing is basically what internet did to the stock investing. Like if we go back to 1970s, your stock settlement, right, investment settlement was T plus 14 days, right? And then gradually it changed to 10, T plus 7, and today we are at a T plus 2 cycle, right? So I think this is what blockchain will do to real estate in this industry, right? Where your property can be split into tokens, right? And owners can list their part of property, right? Like and start monetizing from that, right? For example, I still want to have control of my property, but don't want to sell it full, right? Because today the market does not exist that I sell just half of my property and half of the property I keep ownership with it. It is either it's binary, either it's 1 or it's 0 right now, right? But I think with this blockchain coming into picture, you still have this a facility where investors can acquire tokens and start receiving rental income, right? So let me give it an example, right? For example, Alec, right? He owns a property worth 200,000 in New York, right? and he wants to liquidate 20,000 of his property, right, which is essentially 10,000 tokens. He wants to liquidate. So, and now Connor, he has a budget of $5,000, right? So essentially, he cannot buy any property in New York City with 5,000 budget. He cannot do anything, right? But with this market enable, right, the real estate market, right, blockchain based, he can acquire 2,500 tokens of Alex property, right, which essentially is 2.5% of the entire property, and Connor can start receiving the rental income based on the tokens he has hold, right? And there is a secondary market, also where Connor can come and trade the tokens, based on the asset appreciation price, right? So this is a very simple example, just to reinforce that, how real estate tokenization is actually catching up. There are a lot of players in the market which have, started tokenizing, the real estate. And, for one example, which I know personally is, tokenizing your hotel rooms, right? You can actually think of a lot of innovative use cases. I just gave a very simple use case, but the sky is the limit here. You can have an n number of use cases, in real estate space, right? And the second use case which I talked about earlier is tokenizing ownership of one's future income, right? So, when I said, there are students, there are artists, there are athletes, right? They require fund at their early stage of their career, right? Because not many of them get sponsorship, right? So with and then again, financing options are very limited for them, like, it's very expensive, and it is very cumbersome as well, right? So what if talent could, issue their own equity, right? If I'm a upcoming tennis player, right? If I'm an upcoming tennis player and I have already proved my credentials in the market, but now I don't have any sponsorship from leading brands, right? So how do I move forward, right? How do I make sure that I get the right training and path to move forward? So I think there are platforms where you can tokenize your career prospects using blockchain, and and that will enable investors to fund the talent, and at the same time get a revenue from the future incomes. And I also have a an example for this one. Again, as I mentioned, Alec is a very promising tennis player, and he needs $100,000 for his training equipment, right? So he signs up to the platform, he issues 100,000 tokens, right? So as an investor, tokens, I buy the tokens, and Alec receives 100,000 for his training, which he invests. And as an investor, I get 30% of his future income rights, right? And the fact that everything is in blockchain, you are actually, creating more transparency, right? And you are creating a more viable environment, for both the parties to transact. And I think that's the essence of blockchain, right? When two parties, untrusting parties, come together on the same platform, and that's the essence of blockchain, right? So this is one use case which I wanted to, highlight. And with that comes my last slide. And again, just wrapping up everything. Going forward, I think blockchain will be the cornerstone for all the digital transformation cases, right? Again, there might be there is one section of society which thinks digital transformation is just upgrading from their legacy software to something else. But I think digital transformation itself is a huge space within it. Basically, you create additional revenue streams, right? I think that's the real essence of digital transformation. And as I said, and I think Sudeep also mentioned, it's a very foundational technology, right? Can be applied anywhere. As I said, the boring stuff where you see a lot of use cases currently in enterprise landscape, and the decentralized world, right, where you have a lot of things going on. So end of the day, I think it's the synergy, finding that common ground between both the thing, both the people, where I said earlier, right, one section of society is having a positive radiating exuberance about blockchain can do anything on the planet, and another section of society, as you said, Patrick is a non-believer, right? So I think got to bring both the people on the same page and then move forward. So with that, I come to the end of my presentation, and happy to take any questions, Paresh.
Thank you very much, Varunji. In essence of time, let's move on to Sudeepji for his thoughts, and then we can go on to the question answer session after Navabaro also present. So Sudeepji, your thoughts, please. What's your angle?
We
You're on
cannot hear.
mute.
Okay. Yeah. Hi. So I will. Actually, but interestingly, even I was thinking of covering on NFTs as well. So what I'm going to do here is that just to give a quick background about myself, so that I can give it. I work in the trenches of blockchain for about 5 years. I work in the research and development area of it, and I'm very foundationally on a tech side of it. But at the same time, I do meet a lot of. I've had the pleasure of meeting a lot of CXOs of Fortune 500 and talk to them about how it affects their area for a very long time. So with that, I am going to look at the same problem statement a little differently, right? So, and my view might be a little bit more technical, so bear with me. But at the same time, what I'm going to do is that I'm going to introduce you to some more terminologies, and then what we have already seen so far, and then we'll go from there, right? And in the interest of time, I'm going to cut down my slide deck to a few slides, just 3 slides, and we will talk. We will leave more to for the juicy questioning and question answers, right? So that's how we will do that, right? So what Varun just pointed out is very true. I mean, we are going through a transformative stage of things, but essentially we are looking at markets with just a few types. Like you have already known about ethers and fungible tokens. We have already seen these in action. We know Bitcoin, we know Ethereum, Dogecoin, Cardano. We know all these names now, and the crypto world of ERC20, as well as the parallel tokens that exist. We already know about them, right? We also know about a non-fungible token, the interesting non-fungible token market that has been booming, which has grown at 1200% in last 6 months, right? They have grown by 1200% right now. I'm intimately involved with one of these, so I'm not going to talk which one, but I'm intimately involved with one of the NFT marketplaces, and yes, this has amazing value within itself. But what non-fungible token does today is essentially tells me while fungible tokens have always been about fungibility, right? That one. They're like a money note, right? It basically can be exchanged without change of value. Non-fungible tokens have been predominantly unique about their identity. It's the other end of the spectrum where we're saying that, fungible, if they have a non-fungible token, then that's the only unique non-fungible token in the market, that there's no one other, right? It has a very unique value perspective to it. And these being the two cornerstone that we are looking at right now, and when we are looking at DeFi 1.0. Now I want to introduce you to 3 new kind of tokens. One of them is actually not that uncommon. It's been talked about. One is the non-tradable tokens, right? Which is non-tradable tokens are essentially you own it and you can't trade it to anybody. Once you own that particular token, it belongs to you. It is intimately linked to your identity. Let's look at your passport, your citizenship, your letter of domicile, right? Your degree certificates, right? These might not be your identity, but they can be helpful to use to prove your identity, right? So this is another form of tokens, right? Now, the next form is limited fungible tokens. Now this is fairly interesting, and I will leave that for the last part, because that's where it becomes a little bit more interesting on a technological side of it, as well as and the concept and the impact side of it, and I will build it up to what it means for the larger market, right? The last one is packed non-fungible tokens. That means that a fungible token, non-fungible token, but it is a group of non-fungible tokens which are packed inside one. So now we are coming into a place when we are talking about if I hold this particular non-fungible token, I might actually own a group of tokens together, right? It could be looked into a collectible market. It could also be if I go and purchase managing rights of a company, right? These are or preferential shares of a company, right? When I actually hold a preferential share of a company, it normally comes with a group. It is not sold in silos. They're sold in bulk, right? So it could possibly be having an impact on that. Right? We are basically looking at a group of non-fungible token. Each non-fungible token being unique, they can trade by themselves, but they are grouped inside and packed into a single non-fungible token. So if you own that non-fungible token, you own all of them, or which you could later decide to distribute. The last is the limited fungible tokens. Now, this is a little bit more cryptic concept, but I will actually still hold on to it, right? And I'm going to take you to a little bit more view of how non-fungible, limited fungible token works, right? And this is a slide that I wanted to showcase, right? Now, think about on this year, this month, we had a 30-year fixed treasury bill that came out, and that for May 2021, right? The government decided to float a lot, right? Now, there is cash flows linked to every treasury bill, right? And that treasury bill has a percentage linked to it, and that is our fungible tokens inside, which are packed inside that non-fungible token that actually say that this is a particular treasury bill for that particular month. But the cash flows that are linked to this treasury bill are fungible with each other. Why? Because they share a lot of similarities, right? Now, this particular model essentially allows us to, along with the non-tradable token, where you are actually having identity or things which are very specific, which are very close to the identity of a particular instrument. Fungibility, that means that you can actually trade them in between. So one cash flow from a 30-year fixed May 2021 cash flow represented by one token is actually can be replaced by another token. But a 20-year fixed in May 2021 has a totally different NFT, which has cash flows, which would have the same coupon rate, but they are actually intertradable between themselves, right? So think of this: if these tokens start trading over the market, they actually are able to simulate our capital market structures in a much more closer way. They're able to mimic our capital market structures in a much more closer way than what we have been able to do so far, right? And now, why is this important, right? This is important because of some reasons, right? We've been going through this transformative journey where we have seen DeFi 1.0, where we actually are in right now, where and we are actually at money Legos right now. So with DeFi 1.0, which was basically using non-fungible tokens and fungible tokens and trading something and creating instruments on top of your crypto assets. Right now, if you see in the market, the crypto assets are being a different asset class, which has been isolated. Non-crypto assets are a different. There are Goldman Sachs has already created their crypto asset fund, but it's treated as isolation, right? It is not going to be a mutual fund which will have a crypto and a non-crypto asset. It's not arrived at that phase, right? That is crypto 1.0. We have seen money Legos. Money Legos is more like DeFi 1.0, or all the crypto enthusiasts coming and saying, hey, we have a $2 trillion economy. So we essentially have a scale in which we can create our own separate town and build instruments on top of that, which can actually talk to each other, right? So I can actually use a DEX to actually convert my Ether into a stable coin, then peg that stable coin on Compound and actually get earn money from a trader who wants to borrow it for a day, right? Margin trading. Something that we have done in which it's nothing new. This is a concept which has been existing in the classical finance forever, but it has now been introduced, right? So money Legos allows us to peg one instrument with another, though these instruments are predominantly crypto instruments, right? But here's the problem, right? Crypto market with all its structure is $100 billion. If I take all the DEX together, they are $100 billion in structure. The whole crypto space is around $2 trillion economy, right? What is the size of the overall world economy in terms of money markets? It stacks at 397 or 398 or 400 odd trillion dollars. This is the size. This is very important that while we are being successful in creating these small areas of our own decentralized economy, it is very important for this economy to scale. It is very important it becomes part of the classical economy as well. And one place where it actually changes is the granularity of information this particular economy actually tracks on a very high transparency level, right? That's where DeFi 2.0 actually plays. And that's where the new kinds of tokens, the limited fungibility tokens, which actually mimic a capital market in its current form very easily, become much more important, because the credit ratings of every cash flow changes through the life. But if you look at our credit rating agencies, they depend on the things that is designed to be fudged, that are our books, right? Not our cash flows, right? They basically track our books to actually decide what the credit rating is. So essentially we could, and while we might have, when we bought that particular script or particular stock, the credit rating might be something. It might change over a period of the life form of that particular script, but there is no impact on that particular script because the credit rating was done and then valuation is done on the time of issue of the script, which is actually in itself inefficiency, which had caused the 2018 problem in India, right? The ILFS problem, right? So we definitely have a value for the larger economy from this decentralized world to give them the traceability of changing scenarios and being able to assess the credibility on a real-time level for your bond market, right? Bringing a $10 trillion or a huge, I mean, not even a much bigger economy into the purview with much more flexibility, much more visibility. This is the value that DeFi has, because every time, right, like in any particular yag we do, right, you have to do some swahar and then we get a tathastu, right? So then so you have to put in something to get something back, right? So that's the so this is the participation decentralized economy has to improve the efficiency of our current bond markets, current capital markets. In return, we basically create the bridge which allows the money legos and the DeFi 1.0 economy to actually communicate, because all the bonds, all the capital, all the products that are being designed in the DeFi 1.0 by all the level 2 programs that are coming around in the Ethereum world are essentially having these capabilities inbuilt into them, because that's how they were built upon. So, and then once this interaction happens and we get a common ground and bridge, we can actually be able to reduce the overall cost of making money flow into that grassroots levels of our economy, which is where the real value of blockchain is. If we are able to bring down the cost of our transaction, we can actually penetrate into the lower pyramids much better, much more efficient, and in a much more direct way. So that's where the fun is. That's where the impact is, right? So that's the basic idea that I wanted to do. I designed myself for just 7 or 8 minutes of talk. So I think I've come on to my time. So I will just stop here. And if you have any other questions, I will take them.
Paresh sir, you're on mute.
Sorry. Thank you very much, Sudeepji. That was a nice presentation. Of course, we have questions, but let's have a short presentation from Nava Baro. Mr. Nava, are you there with us? Nava, can you hear us?
He's trying to connect. Actually, he is in, but he is traveling and he is in Assam. The net out there is not very strong. I think even if when he's trying to speak, we are not able to hear him. Navaji, can you hear us now?
I really want to name online the Government Blockchain Association. Oh, there are so many questions. Varun is smiling. I'm sure he also has a lot of questions.
Am I audible now?
Yes. Hello. Now you are still not audible.
The network out there in Assam is too weak, I guess.
Yes.
Am I audible?
Barely audible.
Hello. Audible? Paresh, am I audible?
I can hear you now.
Yes, better than before.
Sure, please tell us your opinion. Please share your angle with us. Navaji, it looks difficult. I'll give you 5 minutes. Try and check your internet. Let's
Paresh
move
sir,
on to.
Paresh sir, I just received a ping from him. Navaji, we can hear you. Please go ahead. Please share your views.
Sure, sure. Please.
Let's give it another 20 seconds, I guess. Thank
Sure,
you.
please.
Hello. Yeah, hi everyone. This is Nava here. Sorry, my apologies. There is a lot of network problem here. I'm like in the state of Assam in Northeast India right now. There is a lot of network problem I'm getting here. So that's why apologies because of the delay. So I couldn't attend the discussion earlier. So I believe I missed the very important part of the discussion. Just wanted to understand the perspective of other speakers as well. But coming back to the point on in terms of blockchain, just I'll speak on the macro issues. Like I don't want to go into the details, technical details. I'm sure there are other experts who can speak technical issues. Uh, the thing is that given the current pandemic situation, like I would like to speak from that perspective, given the current situation, how blockchain overall can be relevant. So globally, if you we all know the kind of challenges that we are facing in terms of trust and transparency. Just giving a practical example, see a lot of in terms of vaccination drive, lot of difficulties we are facing in terms of trust. So what I believe is that uh, given the current situation, there are a lot of wastage of vaccination, not only in India but in other countries also. People are governments are facing a lot of difficulties in getting the people to believe uh, the importance of having vaccine. So there are two important issues that we are facing right now. One is the wastage of vaccine, and another issue is the trust factor. So now imagine a situation if uh, we had a system wherein in the blockchain uh, platform wherein everyone could have understood like what kind of benefit benefit that get from the vaccination in terms of transparency that people all the stakeholders could have known that this is how the transparency is there in terms of the importance of getting vaccinated. If all the stakeholders in the government machinery in the general public would have known that there wouldn't have been any kind of difficulty in terms of wastage of the vaccine. Across departments of the government and the private sector will get more importance. So I want to give some examples. Like for example, a lot of state governments in India they are giving a lot of importance to blockchain as a technology. They are in the process of understanding in which are the public distribution departments that they can apply the blockchain technology. Like for example, the Maharashtra government they are in the process of bringing this blockchain policy. They have recently announced that they're looking into adapting as a blockchain as a technology in the departments in the public distribution departments in the healthcare sector. They're actually in the process of developing a blockchain policy. Similarly, governments like Telangana, then Andhra Pradesh, Tamil Nadu, state governments, they have shown a lot of keen interest in terms of bringing blockchain technology in the public distribution departments. I don't want to go into the technical technical details, like how that our objective is to facilitate and in terms of implementing it in various departments. Our our objective is to bring it out of that. So I just given an example because the current pandemic is very relevant in terms of technology. If we had this platform earlier, so best practices in the medical sector, in terms of treatment, in terms of saving life, in terms of medication, in terms of overall treatment of the patients. If we it would have helped us in terms of the best practices, and then in terms of developing more better overall healthcare setup for the treatment of the current situation. And then this is just a very good example that how it was very important for us to have this platform overall in terms of importance. And there are various other sectors, like you mentioned earlier, in the supply chain management, how it is very important. It has already been mentioned by the previous speaker, so I don't need to go much into details. But I just wanted to highlight this specific sector in the healthcare sector, given the current situation, how the governments can and the stakeholders, various stakeholders can work together, adapting the blockchain technology, how everyone can gain out of that. So this is what I just wanted to convey, because I don't have presentation right now. I'm working out of very remote place in Northeast India, so I'm also getting a network problem. There is very difficult to get a network here. So I just want to I hope you all can hear my voice. Just want to sum up by saying this only for the time being.
Thank you very much, Mr. Nawa, for being with us here today. And we really appreciate the effort you have put in being in Assam with all those issues. We will try to get you again on another show on blockchain. I'm sure we will have a repeat in the next session. Whenever you are free, we should get you on. There is
Sure.
some pretty interesting questions which I'm getting by WhatsApp right now as you speak on questions to ask you from our viewers. I have mentioned
Okay.
before that this goes on our learning management system to over 1 million students. So we get a lot of questions
Right.
via WhatsApp, and sometimes I do ask them here. So there are a lot of questions to you. What is the government doing? Because you mentioned the magic word government uh, and the pandemic. So yes, we should get you on the show again. Let's move on to the
Network
questions.
issue right now. I can hear your voice.
Okay. Navaji, but in a sense of time, let's move on to the questions. If you have questions for Sudeep ji or Varun ji, please feel free to ask them. Patrick, if you have any questions, I'm sure Patrick has questions. Usha ji, anyone else? Hayden, if you have questions, this would be a good time.
Shall I start it off?
Oh, please.
Yeah. So, I mean, first of all, I would say this this content was more sensible for me compared to blockchain for sustainability. Maybe it's because I don't understand this side of of the commercial side as much as I do sustainability. But I still think there was some issues like the due diligence, making that go quickly. I think that's I see this. That's maybe why I see the risks, because it's the same problem as I see in blockchain for sustainability. Because that thing of saying that all the information is there so you can do a transaction very quickly, I think is never true. And that comes to anything, real estate. Real estate is still quite simple, but there can be a lot of things that are hidden. And if you go to industry or something like that is more complex, you can have much more hidden risk in social and environmental issues that have not been incorporated into the blockchain because the operation itself has not recorded it yet. And that's what happens in the due diligence, is that you go in and look at those issues and then you find them or you evaluate the potential risk. So that's where I see the concern is, where blockchain raises the confidence level and sort of makes risks disappear. And the speed of transaction is kind of related to that as well. When things go slowly, that actually allows more time for checking and reflection and so on. So a speed of transaction is not always the best thing for everyone.
So I want Patrick. I think you're still talking about. Sorry, I'll wait. Hello. Have we lost Patrick?
No, Patrick is here. Hi, Patrick. Can you hear us, Patrick?
Does everyone disappear?
Okay.
Or did? Yeah, please go ahead.
Okay. So Patrick, I think we lost the second half of it. This is a little bit in the later part of it. We basically couldn't hear you. But I want to dispel one quick myth, right? Is that blockchain somehow improves transaction speed. Actually, that's not true at all on a technical level. What it does is it optimizes your entire value chain, but not because it's able to do a transaction faster. It's able to do far more transaction in a much more cohesive way. And you're right. You're absolutely right when you say that risks are dependent on what I am able to track, right? Even in sustainability or in terms of sustainability or any use case, right? Even if I am not tracking my counterparty risk or counterparty cash flows, I mean, blockchain is not going to be able to track it, right? Even if I create a token, right, I have to have a process to track that particular risk. And no one at any point of time is suggesting is that we have to do away with that process of tracking that risk, or the process of tracking of that risk, right? And if somebody suggests that, then they haven't understood what's going on, right? The cost, first, there is no transactional benefit. Actually, the transaction speed is relatively slower compared if it is done on a scale level. If you see, there is a big problem with a lot of blockchains is the scalability issues, predominantly because we are struggling with TPSs, that is transaction per second. So you could have a centralized system which can give you a much better performance, but will also take certain risk in doing that, right? So speed is not the reason why you will move to blockchain. It's the fact that you can granularly track a multiple number of events on that particular, be it sustainability, be it a financial transaction. You're able to track multiple things, and you can get to that point with less cost of adding less OPEX cost, is what makes the blockchain tick. It is not. It provides you an ability to go much more granular into your sustainability process, much more granular into your risk assessment process, much more granular into your compliance process, without adding exponential cost to it for when you scale the process. That's where the value of blockchain is. It is not with the generic speed of transaction.
Right, and I would like to add what Sudeep also said, right? I mean, Patrick said that like not everything gets recorded on blockchain, and that is correct, right? It's by the system design, right? Because it's garbage in, garbage out. What you put in, you get in there, right? So if your system design encompasses all the right processes to track the end-to-end traceability, then it makes sense. But I think if you have certain processes which are very vital, for your entire system traceability, then it's important that blockchain considers it, because blockchain by definition, again, Sudeep mentioned it, it's not about speed, it's about getting all those granular details which are needed to prove your transaction, right? Because again, right, we are talking on I think Sudeep also mentioned the blockchain trilemma, right? So there are three pillars to that, right? You have your security, you have your transaction speed, you have your scalability. So you need to do a trade-off here, right? If you focus on security and your scalability, then your other piece, you need to trade off, right? So end of the day, I think it depends on your system design, what kind of system design you have put in, right? And a lot of work has been going on. I mean, you must have heard of oracles, right? So oracles is the one which feeds data into blockchain, right, into smart contracts, right? So so the entire ecosystem of your DeFi, right? I mean, oracles is a very integral part of it. So if you have optimized it, it gets all the relevant data. Blockchain gets all the relevant data. Then it's an very optimized system which does what you want to do. But there are some failed use cases, right? Where I mean, the expectation was speed, but then the trade-off was not proper, right? If you want to do speed, then I think you need to design your case in a way that you focus on two pillars of your blockchain piece and trade off the other part.
Thank you very much, Sudeep ji and Varun ji, for that answer. Patrick, do you have any follow-up questions?
Unfortunately, I got knocked out.
But you are right about this particular session on blockchain being much more interesting, very interesting. And finally, we have a blockchain pro, Varun, agreeing that yes, not all frauds can be controlled by a blockchain. I'll give you an example. In Greece, 1 out of 4 buildings are illegal, or they are not really registered, and that's what a research report says. So even if the government uses blockchain, they will be able to register 3 buildings and not the 4th one. Because if there are no records, there are no records. So blockchain is not something that goes around creating records. It only depends on who is filling the records. So yes, while it's a technology which will help your profitability or help your operations, the underlying people risk remain. So yes, Patrick, you are absolutely right, and Varun has mentioned that. Do we have any more questions, or we call it a day?
I can ask more, and then I get knocked out again. I'll have to watch the answers on YouTube afterwards. But
no, I think you can go ahead, Patrick.
I can put comments on LinkedIn if I agree with the answer or not. But,
that would be nice. We'll tag Sudeep, Varun, and now, so they managed to answer them. Mr. Hayden, do you have any questions, please? Let me introduce Hayden. Hayden is a policymaker from Trinidad and Tobago. He's the ex-CEO of Securities Exchange Board at Trinidad. So from a policy point of view, do you have any questions?
Yeah, well, let me kind of bring my ex-regulator hat into this thing, because I guess one of the challenges is the extent to which the regulator has kept pace with the market, and whether the fact that the regulator tends to be 3 or 4 steps behind the market developments, whether this inhibits the development of the product of the science. I don't know if the 2 gentlemen can shed some light there.
But let me ask a question to Hayden. Hayden, I understand that the establishment, the banks, the banking establishment, the government banking establishment makes a lot of money from money transfer, transferring money from one person's account to another. Put it in a very basic way. Cryptocurrency changes that. Their banking services would not be required, and there goes away billions of dollars of transaction fee. So would the establishments not work against the cryptocurrency? Would regulators be against crypto for the simple reason that regulators work with the government and the banks, they make billions in fees, in transactionary fees. Just transferring account money from one account to another gets them fees. Crypto changes that scenario. So as a regulator, what really happens?
On the contrary, I would have to say that the industry, meaning the banking sector and the regulator, have embraced, to the extent possible, embrace cryptocurrency and blockchain technology as a means of enhancing their service, their service delivery. In our segment of the market, to be honest, there's a lot of money obtained from money transfers. A lot of the core business of the banking remains related to the spread between deposit rates and lending rates. So I don't think there's been pushback from the market in that sense. I mean, what has happened is that a lot of the banks have moved to acquire entities engaged in the crypto market. On the contrary.
Yeah.
Okay.
So
Thank you for that answer.
I have a question to say.
Yes,
First of all, I was not able to actually understand his question, so I would want to understand his question one more time. So that's one thing I want from there. And to my understanding so far, I mean, one of the most please correct me if I'm wrong. One of the most conducive spaces for crypto has been the Caribbean islands, and again, it's gross generalization, and I don't have a micro level details. But it seems that why is I mean, and my question was actually contrary, because to what you were suggesting is basically because why has crypto market done so well in that particular space compared to vis-a-vis a little bit further down south, right? In LATAM, it's not that hot, right? But it is very hot and pretty widely used. The penetration is pretty good in that particular market. Is that a right understanding? Is that a wrong narrative that I'm getting from the market?
Was that question addressed to me?
Yes, sir.
Oh, all right. So and by that market, you're talking about the Caribbean?
Yes.
Latin America.
No, I'm talking Caribbeans, yeah.
Yeah. I mean, the banks in the Caribbean have sort of a peculiar exposure. I don't know if you're familiar with the fact that we've had an issue with maintaining our correspondent banking relationships in the region, and that is a serious problem in terms of funding transfers and trade and so on. Yeah. So in our region, I would say that the embracing of cryptocurrencies has been led by the central banks more so than the rest of the sector. So the Jamaica Central Bank is moving to establish a regulatory cryptocurrency. Eastern Caribbean has also gone that route. Trinidad, where I live, has been a little tardy, but I expect that will take place also, to sort of create another avenue for the necessary foreign flows that are required for this part of the world to maintain its connectivity with the rest of the world. I can't say that that it's sort of picked up generally in the market. And I think that the fact that it's led by the regulators is a positive. So I think that's where we are right now in the Caribbean.
And I could not really get the question that you asked. If you would repeat your question, that would be nice.
So I was asking, so that the issue with new market developments in the financial field, one of the issues relates to the tardiness of the regulator, because invariably the regulator finds himself 3 or 4 steps behind the market in developing legislation, in developing regulations to for side of the market and to facilitate both of them. So I know that this is a case to varying degrees around the world, and I don't know if in your part of the world whether that's an issue, whether the regulatory response and the tardiness of the regulatory response is an inhibiting factor.
Yeah, if I can take that.
Yes, you should take that actually.
Yes, because I'm actually in the process right now, working with Malaysian regulators, and what you said is exactly the point, right? I mean, it's a twofold thing, right? One is keeping the investors' protection in mind, and second thing, how do you leapfrog in this, in the race, regulators' race to be in the forefront of this technical innovation, right? Like when you talk about, this advanced economies, right, crypto space, I mean, you talk about Hong Kong, Singapore, so they are in the forefront, right? I mean, they have all sort of regulatory, like sandbox and, in a very robust framework where startups can actually, get started in no time, right? But at the same time, regulators are much concerned, and you rightly mentioned they always do the catch-up act, right? And and we see this as an opportunity to lobby, right? To lobby with the regulators and make them understand the future space, right? What are the benefits, and we are in the process of doing right now. For our platform, we are in the process of liaising with the regulators, and we see this two contradictory challenges, right? Where investor protection, of course, very important. Every regulator would want to protect the investors' interest in mind, while at the same time the hidden motive is to again like do something innovative in the space where you are actually opening up your economy and getting benefits. So again it's a chicken and egg problem right now, right? But from our standpoint, our view, we see this as an opportunity, right? If we can handhold the regulators, guide them with the process what you're envisioning, right? And again, it might be a long process. It's not a single shot that I give a presentation, they accept. So it's an opportunity which we see to help the regulators to come up to the space and take a leapfrog from there, in terms of how to move forward. I hope that like got some perspective, right, to your question, Hayden.
And Hayden, and to bring the Indian context into it, I mean, we just had a Supreme Court ruling to actually to take the RBI note off, right, which has allowed a lot of crypto exchanges to function back in India. So I mean, yeah, it's a tug of war. It's and with all the news that's floating around, it's we can't say that we are doing. I mean, definitely, what is different is that we are, unlike in Caribbeans, where the regulator is taking a lead role to actually adopt, and there is a reason for it. India, unfortunately, does not have the correspondent bank problem. We basically have both Swift and wire services are very commonly used by all, and we have our anchor bankings here. So our banking system is much more integrated, and hence we do not have that particular nuance, and hence RBI in India doesn't need crypto to actually do correspondence of international money transfers and FDIs. And so we are having a much longer battle to fight in that context. We do not have that value in India.
Yes.
Thank you.
Thank you very much, Sudeepji. We have time for one more question. It's 8:29. We have finished at 8:30. Usha ji, you have a question for us.
Yeah, we've been talking about, the regulator's role, and Varun and Sudeep, Mr. Hayden, all of them have given their points. But I think way back, sometime from 2011, for risk management, there is a 5-layer architecture which was kind of proposed in the erstwhile softwares, the ERPs for the banks, also I guess for payment banks and UPs. So I just want to know whether our panelists can add something to that. Is it a way to kind of help the regulator also with their oversight when you have this 5-layer kind of architecture as part of the protocol or part of the framework in which all the payment stakeholders, payment system stakeholders should be going ahead with, like Varun said, tokenization, or even oversight, or even in the creation of apps, payment apps, etc. I know it's a very long winding question, but this is what I can ask in summary after going through the entire presentations.
I don't know about the 5-layer architecture really, and something that I would definitely invest some time to understand a little bit better in terms of the what risk assessment architecture is already present in ERP systems. But given one of the very important aspect, and that's what we always talk to all regulating bodies across the world, is that this actually makes the regulator's job much more easier. If you actually move to a blockchain-based technology, your
Sorry,
job,
move to
a blockchain-centric technology. I'm not saying that just
this 5-layer architecture is in fact being used in the blockchain architecture. Of course, it was initially way back in 2011. It was for cryptocurrencies.
Oh wow!
Basically, to help the risk assessment in cryptocurrencies. It's just got like a endpoint, and then it's kind of tracking the user data across channels in the channel itself. And these layers have been built into quite a few softwares, but very, very sparingly, by some of the more expensive softwares. And recently in my discussion with one of the RBI head honchos, I was told that this is one of their primary concerns. And that's why I thought this August panel should be able to throw light on that. Why the UPs or banks or payment systems are not making this 5-layer architecture as part of the framework. Sorry, did I lose you there?
No, you did not.
It's a very simple architecture. You have an endpoint centric layer. Then you have the navigation layer. Like when we go to make a payment, how the user is navigating it. Then you have the user within the channel, like if you're using net banking or mobile banking. And then you have the user-centric data across the channels. And then, of course, it's the entire big data analysis. So if I may point out, one of the Swiss banking softwares is using this for financial crime mitigations.
I know. Yeah, 11s. Yep.
So I was just thinking something is so very easily available, and yet there is a lot of discussion on cybercrime and financial crime mitigation, and why no cryptocurrency or why not cryptocurrency, since you also had made the point about cryptocurrencies as to why we are still a little backward in that.
Varun, you want to answer?
No, I mean, again, I will have to go to the drawing board to understand this architecture. I mean, that
was a tough one. This was a tough panel, and Usha ji came out with a tough question. Let's take this offline.
No, it's very simple. Like you explained the tokenization so well.
So
I mean,
I understand. We understand from a perspective. The problem is, Ushaji, that I would answer with a lot of speculation and assumptions in my head. So I don't know if my
No,
answer is.
this is not at all a technical point. I'm also a functional person, and having done the Bank of Baroda technology transformation, I remember that they didn't go for this ERP which had all this, because it was like kind of 10x at that time, and they went for a simple Finacle at that time.
Yeah.
And now they're sitting and reinventing the wheel. So I know this panel is together aggregated kind of knowledge base. So it was just a question to the panel.
So my point of view on this problem statement is that you see the problem is there in your question. It's within the question purview itself, because when you chose a Finacle versus a Swift application, you basically chose compliance versus a non-compliant system, right? And that's what blockchain starts stating, that if here's something that RBI really wants Bank of Baroda to talk about or track and see that should to be able to inspect that even at a transactional level, if you actually have that information in a blockchain, on a public blockchain, it becomes so much more easier. It might be a case that RBI doesn't want, or Bank of Baroda does not want everybody to see it. In that scenario, you could actually create a level 2 application where you can actually see these compliances very easily, right? And the problem is this, right? That when you codify it and you centralize it, it becomes a feature, right? When you actually create a standards of it and ask and track them and ask the concerned private entities to be answerable to those, it becomes just a way of doing business. And that's where blockchain could actually help compliances more than it can. So there's no question about, and I think nobody is disputing, even in the organization, that blockchain has that value, right? Compliance without intrusion, the value and that should be in case. But I don't think this is a case of blockchain-based architecture being followed, because neither Finacle nor others are following. Swift has just started its process with blockchain-based architecture, but they've done a pilot in 11 countries. But definitely.
Sorry, I missed that name, Sudeep. I missed that name. Who has just started?
Swift has started up, has done a prototype pilot study of the same wire transfer, international wire transfer using blockchain, and they had 40 participating banks across the world, and 11 participated in the pilot actively. But these are architects. This architecture was not, but that was basically for reducing the cost of transaction. And not.
Thank you for your answer. I think it has answered most of my, your answer was much more crisper than my question, but it has answered what I wanted to know.
Thank you very much, Sudeep. Thank you, Ushaji. Thank you. This was a very interesting session, as I said earlier.
Thank you, Professor.
Thank you very much, Ushaji. Thank you, Sudeep, Varun, Patrick,
Thank you.
Hayden. Thank you all very much. Thank you.